All right. Good morning, everybody, and welcome to TheoTRADE Chat. It's Don Kaufman here. It's bright and early. It's April 30th, 2024. We have just under 3 minutes ago to the cash open. Spoos are off by some 16 handles. Inflation once again taking center stage. So if you're a little curious about a precipitous drop in markets, it was data that none of us ever look at. I'll explain that a little bit after the cash open, but 25 years, I don't think I've ever seen like employment costs move markets ever. In fact, I can tell you right now, I've never seen employment costs move markets. So it's not even like, second string data. It's like third string down the road. Nobody even knows what the hell it is. It's good stuff. Anyway, with that, the S&Ps are under a little bit of pressure this morning, just a little bit. Like, look, 17 handles is no what's 17 handles amongst friends. There's about 200,000 contracts trading, which I will say this: the contract size really picked up after that. There was nothing going on this morning. There wasn't, we were going to do maybe 120,000 contracts before that data came out. So the data actually moved us. There is a little bit of a hint of volatility in the air. The bond market right now, though, that's what's getting interesting. The bond market is threatening. I feel very threatened by it. The bond market is actually threatening to pierce through some of the recent lows. This looks like problematic today, even more than the S&Ps. So if you're looking for the quintessential dip buy, you are. I would look very carefully towards the bond market, which is breaking a little bit lower. The one thing I have to tell you, I'm a little perplexed on is gold. Gold's getting smacked back, but the dollar is once again exploding higher. So you have bonds to lows, dollar near highs, dogs and cats living together. As we come into this cash open here, there's not a lot to say other than pressure, mild pressure, kind of across the board. I assume that you're going to see tech once again try to get a bid back under it. And I assume this because none of the tech stocks are really like, down per se. Apple is flat. Microsoft's relatively flat. Amazon has earnings today. The Google, they're just relatively flat. And again, Meta, like a $2 hit is flat. Tesla, there you go. There's actually your stock that's down a little bit today. I'm already out of the positions in there, but that's actually largely, let's come to the cash open. A lot happens very quickly. Anyway, you can see Tesla down. That's actually your reasoning for the Nasdaq being down along with Nvidia. That was the point I was trying to make. Now, here is something interesting. I would not have seen this coming, and that is the advanced decline line is very negative. Very, very negative. Much more so than, again, I would have anticipated. Ticks are also fairly horrendous. Negative 1100 tick. I like it. I like it. Sign me up for that one. Anyway, so what do I expect in here right off the bat? I'll tell you exactly what I would expect: a little bit of a bid back and then kind of a fade on here. That is what I would look for in an early trade: a bid back and a fade. The reason for the bid back and then the fade, Nvidia is a little bit suspect here, so it may have a bid under it, but it may fade momentarily. Look for us to possibly retest into some of these overnight lows. Only because, again, at a glance, it's a pretty serious advanced decline line. It's a marketplace that is clearly under pressure, but what makes me believe that it's going to continue to be under pressure, I'm not looking at the tape over here. By the way, I'm not looking at the chart and going like, we're going to go up and we're going to go down. We're going to do a little dance, make a little love, get down tonight. It's not what I'm looking at. What I'm looking at to try to decipher is the bond market. The bond market's at lows. I'm sorry, we're not rallying with bond market near lows. You can attempt to rally, but it'll probably constantly get sucked back. The dollar, that's a big friggin' move. That's a big move. It's a big move back to the upside. I wouldn't care about the dollar if it wasn't like, right where it is about to break out. The Fed announcement's going to come. Dogs and cats living together. It's only the second time we've said that today. Then we bring over the financials. The financials, just again, very, very mild selling going here. Nothing to actually spark any real sell side across the board. your market today pretty much belongs to, energy is a little bit of a drag this morning. It is what it is. It's down 0.7%. And then, of course, on top of that, just a few tech stocks. But I have to tell you, I am really caught off guard by the fact that we're almost correlated to the downside. Now, that is not necessarily always a bad thing. Like correlation is of critical importance because we start, everybody thinks about individual stocks like Meta's going to do this to the market, and Tesla's doing this to the market, Nvidia's doing this to the market. When you're correlated, it's the S&Ps. In my opinion, like looking at a correlated marketplace, like in heavy volatility, okay, you don't have to worry about individual stocks. No one cares. It's all stat arb at that point. And what that basically means is we move as a unit where you could have like, 2-3 stocks, 2-3 big stocks that actually hold us down. You could have literally the whole market up, okay, and 2 or 3 big stocks down. That is a confusing picture because those 3 stocks, if one of them rallies, it lifts the whole marketplace. This is an easier picture to read into, and it's an easier picture because we move as a lockstep unit. This is days where volatility is going to matter. It is curious that the volatility futures in the first 3 minutes of trade today, they actually dropped minimally, but they dropped, right? And this is also where, people are talking about, different technical patterns. That's fine. I don't get into any of that crap though when you see a drop like this. I mean, it's a news-driven marketplace. So let's talk a little bit about the news as we settle into this morning. As I was saying a moment ago, the financials are seeing some selling, and that looks like a bit of a rotation. I mean, it looks like they're selling financials. There's a slight bid right now under a handful of tech stocks, a very slight bid under a handful of tech stocks, which, again, speaks volumes right now. You have Nvidia coming back up. So again, I don't and did not expect this to last any stretch of the imagination. Okay, I did find something very amusing, and then we'll talk about some of the data that came out. But so some of the data that came out this morning was, again, kind of tertiary data, which we'll discuss in a moment. But the one thing that was all over the news this morning was Goldman Sachs. See if I can actually find it. Okay, it was all over the news this morning. Goldman Sachs, okay, expected nothing but buy side. No matter what happened this week, they were talking about buy side across the board. I have to love stuff like that. Goldman says momentum traders are poised to buy stocks, whatever happens this week. Okay, and the earnings deluge continues. That was actually a headline in Bloomberg from Goldman, that they're, no matter what happens, CTAs are buyers, global equities, S&P 500, in every scenario this week, we're going to be bought. Forgive me, but right there, I'm out. That right there will make me a bear. Not because Goldman's right or wrong, but in every scenario. I don't think I've seen a press release like this before that made headlines at Bloomberg. I'm serious. I don't think I've ever seen a press release like that where they're like, in every scenario, we're going to be bought across the board. Holy crap. What are they? That one lasted. I mean, that headline came out at about 4:30 in the morning. By 5:30 in the morning, we had a nice little drop because of inflation. It did not age well. The day is young and the marketplace could definitely rally back up, but that one did not age well. I thought that was kind of funny because like the first thing that I read this morning, in here. Anyway, as I was getting into this, there were a lot of questions about this drop this morning that I saw, not only in the chat room, had a couple of people email me. Allow me to explain now. So I am very much not into news, but as I always advocate, you got to know what's coming out, okay, and when it's coming out, period. This one, no matter how many times that I've looked at data coming out. Not in a million years would I have thought that the US employment wages and US employment cost could have actually driven a marketplace, because this crap nobody cares about. It's third string data. If headline data, like, the top of the data, like food chain, would be like CPI, right? That would be like CPI or PCE data, crap that the Fed looks like. Employment situation later this week. I would say CPI, PCE, and employment situation are the three big ones. Okay. And there's a couple other big ones, but those are the three really big ones. Almost everything else, like, PMI, okay, and the Michigan survey, that your kid says the economy is great. Okay. This is third string, okay, hasn't gotten off the bench in 25 years kind of data. It's the US employment wages, which outstripped even the highest expectation, basically indicative of inflation. And it caught the market by surprise. Obviously, things are a little bit sensitive right now with the Fed meeting, tomorrow. Well, the Fed meeting is going on right now and tomorrow, but in any regard, caught the market off guard. We had a fast, 20 plus point drop. I mean, we were trading basically, 43, 44. And in the next moment, we were trading 23. So it's 20 handle, move. By the way, I'm still, all bared up with no place to go. The bonds are actually breaking lows. So get bared up right now. If you're not, you're not paying attention. So you think a bid's coming under this marketplace. I'm sorry to tell you, the bonds just broke lows. So I said, you watch the bonds, stop looking at the S&Ps for a moment. Even if they bid up, they're going to be under pressure a little bit later today. All right. So that piece of data came out and points to inflation, really caught the market off guard. There was another piece of data that came out no one even cares about anymore. This is like second and third string data as well, the Case-Shiller. I find it interesting, though, that no one pays attention to this, okay? Because with all due respect, it is Case-Shiller. It is the housing market. No, the market does not care anymore about the housing market. It's pretty freaking amazing. It doesn't care about the housing market. Anyway, Case-Shiller came out, okay? Blistering hot levels. Blistering hot. This is not a good sign for inflation, okay? This is, again, increases expectations of 0.1%. We hit 0.6%. I mean, this number, because it's the housing market, is and can be highly variable, but it's not a good sign for inflation. I mean, the Fed, like, do something already, people. Do something in any regard, okay? The Case-Shiller, though, had zero impact, which brings me then, of course, to the calendar. Now, there is a Chicago PMI. There is a consumer confidence. Both of these, again, I got to stress to you, and I should create alarms for both of them. It pains me to do this. I mean, it really does. Why? Okay. It pains me because these are not numbers that anyone should give a damn about. They're nothing. All right. They're nothing. And yet now markets are starting to pay attention to them, especially on days where bonds are at lows. Moreover, you have the Fed the next day, some of the final data that comes out. But the market is getting very skittish right now about the return of inflation. That's, without unequivocation, you say that. I mean, look, that's what's driving markets here. Okay, so back over to the charts. So the S&Ps, they're rallying up a little bit. It is absolutely tech, and more specific, it's NVIDIA that is starting to catch a little bit of fire this morning. A few of the tech stocks, and again, I am fine with the idea of a rally back if the bonds start to retrench and head higher. Okay. I will not today trust a rally if the bonds remain low. That would be, the overwhelming kind of consensus out of me today. The order flow in NVIDIA, okay, is very even. It's dead even in here. So what you're seeing in NVIDIA, it's not anybody trying to squeeze anything. There's nothing going on in here, okay, out of the norm. that is of critical importance. Okay. And that doesn't mean that nobody's going to rush in here and start buying calls. Okay. But I stress to you, in fact, they might be buying some calls right now, but I stress to you, there's nothing unusual going on. It's not, this is not the droids you're looking for. If you take a look at Meta, also the order flow, it's pretty even. There's a little bit of call buying going on in here. Nothing out of the ordinary. Again, there's a little bit of a bid into tech at the exact same time. You know, even the financials have come back. I still assume that this is going to roll back over. And again, the ticks are still negative, but look, they were, you know, negative, 1100 at the open. So they've come back a little bit. I'd expect the ticks to pick up to the downside over here. And tech, again, struggling, right? It's positive, but absolutely struggling. Look for that to kind of continue today. So this day could be met with, you know, the bid back, the drop, the bid back, the drop. The only way we really start to fly in the S&Ps, and I'm stressing this to you, the only way we fly in the S&Ps, okay, you got to see exactly what just happened in the last 4 or 5 minutes. Okay, 5 minutes ago, we're at lows. If the bonds get a bid back under them, you got a chance to rally in the S&Ps. If the bonds fade back, it's going to smash these S&Ps. So you got to be mindful today. The bond market is taking center stage this week because of the data coming out right now. And that's one of the things that is important to be able to read into. That is, it's lost when you're looking. I mean, I get it. There's technical charts over here. Okay, there's the first announcement coming out in a minute. I get it. There's technicals. We're clawing back to basically even on the day. Meanwhile, okay, nothing is going to matter if those bonds start to break lower. All right, that's what matters on a week where you have a Fed announcement, an employment situation, yada, 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 20 other things in here. So as the market kind of claws back, excuse me, we'll see if Chicago PMI has much of an impact. Now, here's the irony. The Chicago PMI is not going to have a direct impact like on Apple. It's not going to have a direct impact on Meta. The Chicago PMI would have a direct impact, though, right here in the bond market. So if you want to see a rally, boom, these bonds break to the upside, the marketplace breaks to the upside. But all we're seeing right now, I know we see a bid back under here, but predominantly noise till some of the news actually breaks over here. A whole lot of noise. Okay, a whole lot of noise in this marketplace. Anyway, with that, we're going to look at some individual stocks. That news, by the way, is out. It's a dud. Like, I don't even know what the news is. Again, I've said this time and time again. I'm much more of a purist now. Like, I don't care what the data is. You know, doesn't matter what the data is. Doesn't, you know, I just took you through, you know, an employment cost that no one has ever looked at. Like, no one looks at that crap in 20 years, and all of a sudden it's moving markets. All that matters, though, okay, is what's going to move markets, when it's going to move markets, okay, and the implication right now is that this bond market is kind of largely responsible for a lot of the moves you're going to see in the S&Ps. So yeah, just be aware of that. All right, so back into a couple of trade opportunities. What I am shopping for this week, I would like to put on some more in-out spreads. There's only one in-out spread I presently have on. It is right here, right on the dance floor. Okay, this is the 4240 put spread inside. I can't read through that crap. So it's up about 20% right now. Neither here nor there. Look, it's up 20% 1 minute, down 20% the next. I am now looking for a 55% return in here. So let's go over to the account statement. Look at the XLF. Okay, these are some of the trades that I've actually put together here. All right, so 86 cents is what I paid for it. Now, the reason I'm bringing this up, 86 cents. What are we trying to make on it? Well, we're trying to make $1.55. So 86 cents multiplied by 1.55 equals $1.33. So the reason I'm bringing this to your attention is it's time to create a GTC that's good till canceled, okay, on at least one of these contracts. Doesn't matter how many I have on, but if I put the trade on, okay, at 86 cents, you saw me go over here, create opposite order, brings up the opposite order, okay, and I want to put this basically at $1.33. I'll toggle it. You can just type in the number, but I'm going to put this at $1.33. Make sure everybody understands. So why, if I have like say 5 or 10 or 20 on, why do I only put a one lot? I'm using this, okay, like an alert. What's better than an alert that actually fills in a live marketplace? To me, that's it's excellent because it's letting me know not only is the trade filled profitably, but it's letting me know that I actually can get filled profitably at a particular level. And then I go back in and I work the remaining trades by hand. And every one of you can do that. You have your mobile device and all of a sudden, ding, you get a fill. You're like, holy crap, I got out of my XLF trade. Now work the rest by hand. Okay. Make you better at it too. Make you much better. And you don't have to do that if you're, a busy individual, but what? Nobody in here is doing anything. Okay. No one in here is doing anything. Anyway, change your day order to a GTC that's good till canceled. Hit confirm and send the trade. And what you basically have under activity and positions is you have just an order that's resting out in the book. Okay. The mark is 102. You're $1.33. Are you going to fill? Of course not. You're not going to fill. You're 30 cents off the mark. Right now, you're literally 30 cents off the mark. So you're not going to fill. Okay. But that's okay. It's okay. We're just going to sit there and we're going to wait for it. Sorry, I'm looking. Chicago PMI. Oh, the Chicago PMI really sucked. Interesting that no one cared about that one. Chicago PMI, 37.9. Expected 45. Holy crap. That is tried for the corner and missed. Anybody else starting to see the some of the data coming in? Again, I could care less what the data is because by the time your brain can even assimilate what data you're even looking at, the trade is already played out. By the way, that's the only reason I'm so anti, like, oh, look at the Chicago PMI. Like, that's why I'm like totally against it. It's absolutely ridiculous. It's sheer stupidity. If you think you can hear the Fed, oh, I heard what the Fed said, and then I made a trade. Okay. You're delusional at this point, right? Because by the time you even hear the Fed, you're probably 7 to 10 seconds delayed. But it's okay, man. I'm watching it on YouTube, baby. You know that trading firms have old school, microphones, old school microphones in the Fed that they're plugged into that will actually beam the information, using incredibly high-speed technology where algorithms can read it and execute on it sub-second. By the time you even hear it, it is over. It's over. That's how crazy tech is. Speed, the speed war. You're not in it. You lost it. You have no chance. Okay. Don't want to sound defeating, but if you think speed's your game, have you seen Thinkorswim lately? Okay. Let me tell you something about Chuck. Chuck ain't fast. Chuck used to be a little bit faster in his prime, but Chuck ain't fast. Okay. Tasty is fast, but still you have no shot at speed in here. So I remember back in the day, I was having this conversation with my 11-year-old, and the conversation was about a mouse. I don't know if I can get this on camera. Damn it, you can't even see. It's a mouse, and yet you can't see it on here. It knows it's an inanimate. If I put it against a black shirt, hold on, you can see that there is a mouse there. Son of a, there's a mouse there. You see it? Anyway, the conversation I was having with my son is how fast you can double click. By the time you actually can execute a trade on the platform, right? So when we were Thinkorswim in earlier years, this is going back to like 2005, 6, or 7, I don't know, at some point in there, Okay. We used to measure speed of execution. Like it was done in a means where they're literally measuring how fast, is Don on Active Trader when Active Trader first came out. Like how fast was I on this platform? How fast was I in here? Okay. And it came down to like the average was about 2/100ths of a second before you could even click on here. So, and the reason I was having this conversation with my son is they have mice these days that have like auto clickers. If you click once, it can click like 1,000 times so that you're better in a video game. And I'm like, let's let's not any of you buy that, because if you had a mouse that could click 1,000 times per second, if you did click right here into this little monkey, I don't have the auto in here, but if you did click into that, you'd be putting like 1,000 contracts on like that. And this is the conversation went dark after that one. I reminded him when he was like, I don't know, he was like 2 or 3. Little bastard actually placed a trade on my computer. So if you guys never heard this story, Active Traders open. It was just a laptop. It was open in my office in our old house. And he just walks over and he's, zooming around over there. Anyway, trade gets placed. Okay. And it was actually a Russell future, which are pretty big. It was 3 Russell futures. And I had heard the fill and I'm like, oh, what the hell? Like, I don't care, whatever. What the hell? I was letting him play on the computer. It's totally my fault. But when I went back over to see what had happened, he then walked into the corner of my office, okay, pulls down the diaper, fully pees in the corner of my office. To add insult to injury, the child pees in the corner of the office, like on the wall, okay, like a dog would do. He didn't lift the leg. That would have made it much better. And I'm left with a 3 lot of Russell futures. I did actually make some money on the Russell futures, like next to nothing, but it doesn't matter. Okay. It doesn't matter. And of course, there's no chance that my wife is actually in the house at that point because I was supposed to be watching him. It's a good job. It's a good job. It's a good job watching him. So insult to injury, I had to clean up the trading mess and then clean up the mess in the corner. That was before I think we moved to wood after that. Shortly after that, carpeting I have found it's really not good for children and dogs. It's not. Okay. I strongly suggest you go with hard floors, okay, with children and animals, preferably not wood, not wood. Okay. Yeah, I'm done with carpeting. And you can see scorpions better on tile. Not that we have any problems with scorpions here. We actually don't in this house, but previous one, you see those guys a lot. Only one actually in the family that's been stung by a scorpion is that child. Okay. Took it like a champ too. Just, it's like, yeah, whatever. Okay. S&P sticks are picking up negative. This is kind of what we prefaced. And I said, it's very hard to rally if the bonds are going to stay near lows of the session. Okay. It's good stuff. Termites love hard floors in Arizona. So termites in Arizona, they take like 30 years to do any damage. Okay. Termites in the island could take like 30 days and eat a whole broomstick. It's insane. Okay. The termites on the island are like steroid eating termites. I've never seen anything like that before. But if you threw a broomstick into termites on the island, it's like a cartoon where it just buzz saws immediately. It is quite impressive, the damage. Okay, because I've had some damage. Everywhere there's termites in Arizona. Everywhere there's termites in on the island too. So the island, okay, you don't anger the gods there. The island belongs to the island. You may own a house on that island, but you won't own the island. It owns itself. Don't forget it. You piss it off, oh, it's all over. Okay, it's all over. Continuing on over here. Somebody said, did you first close the trade? I don't know which trade, Dimitri, you are referencing. Oh, you're talking about in the Russell. Oh yeah, no, I closed the trade and then cleaned up human pee. It's good stuff. Okay. Apparently my office looks like a toilet. Um, that does make some sense though. There's definitely some some truth behind that one. So anyway, the XLF, as I was mentioning a moment ago, I had placed a GTC order in it, and it's coming a lot closer. Like I don't think this one's going to fill today unless these S&Ps really got smoked. But just to give you an estimate, like if the XLF is down at like the 40 level, that's a pretty big move. But it's down at the 40 level, this thing's definitely going to fill. You've got to lose though probably another about 45 to 50 cents today, which is a big percentage move. It would be like a 1.5% move today. Anyway, I'm less than enthused though about the way this marketplace is shaping up for today's trading session. Not because it bid back or anything like that. The trade right now is a little scattered and broken. Let's come over to the SPX for just a moment, just to show you. We're right back to where we started the week. We've had no movement. There's what is it, an $82 expected move in the week. So $82 expected move, there's literally no movement. Obviously, we have the Fed coming out, but before we even have the Fed coming out, we have Amazon as well. So Amazon's going to have earnings tonight. Okay, look, I don't have any clue what this is going to look like for Amazon tonight. I gave a little bit of feedback yesterday here. So I gave a little bit of feedback here of what this is going to look like. And when I brought it up yesterday, I'll reiterate today. Okay, there's more news coming out. There's another consumer sentiment number coming out, right? Whoops, swing and a miss. Okay, don't. Anyway, another consumer sentiment number is coming out, consumer confidence, whatever the hell it is. This again, this is like third tier data that no one should care about. But with all due respect, you just moved on third tier data today that no one should care about, and you moved big, and the bonds are at lows. So this consumer confidence number could mean a lot. Can you imagine inflation is coming back, but the data seems to be getting worse, right? Home prices are going up, okay, but employment data is like going down. It's not good. It's not good. Chicago PMI doesn't look good, and we'll see what comes out of this. I'll come back to Amazon in just 1 second, right? Because there are some things that I want to possibly do inside of Amazon. Look at this. There's no volume. There's no volume whatsoever, which is a little bit nerve-wracking before any of these announcements. So data's out. Okay. Again, it doesn't seem to be much of a move to markets. The bond market just did jump though on that one. Okay. So bond markets are moving on this data. Which is interesting to say the least. This in the bond market, just this little uptick can lend itself to more upside potential. We'll see if it actually holds higher though. If we downtick over here, again, you know that the S&Ps are going to be under pressure again. So with that, Amazon, I kind of gave my feeling on this one, and that is I could not be more ambiguous as to the direction of Amazon on this most recent earnings. And I'm not trying to say that to be difficult or anything. Okay. I mean, look, I told you on Tesla, I was totally bullish on that one. That's the only one I've really traded into this earnings announcement. Okay. I was very bullish in Tesla because I thought that every bad piece of news was priced in. So I made money in the earnings trade, made money in a catapult. I'm out of both of them. Okay. In Amazon, this one's kind of a coin toss. And I was bringing it up yesterday. I'm very ambiguous onto this earnings because the web services could be rocking. I kind of think that the sales could be off. All right. So obviously people realize there's two sides of Amazon. There's the Amazon that's the cloud business, and there's the Amazon that sells crap to you. The Amazon that sells crap to you, I don't know. I'm not sure it's going to be spectacular. The cloud business, though, I kind of think like, how could that be bad, given the fact that everybody else has had stellar cloud business? The market seems to pay a lot of attention, though, to the cloud business. Then the next question is, though, so if I think the cloud business is going to be good, maybe that's already priced in here. I mean, maybe it's already priced in. So I have a very tough time with this. And I do recognize, though, the volatility is also having a tough time with it. So Amazon has quite the little expected move, and it's a decent sized expected move. I was comparing this to Apple, where everybody's like focused on Apple. Apple has half the expected move of Amazon, but they're priced very similarly, right? $175 stock and $181 stock. And I like to do that to give you, like a baseline from one to the other. So you have something to compare it to. When you look at expected move and you're just like, yeah, 14 bucks as compared to what? Well, as compared to Apple, which only has a $7 expected move. Now, I know that Apple is a big market cap, right? And when you look at market cap over here, everybody's like, well, Apple's a lot bigger. Okay, so Apple's a $2.7 trillion company, and Amazon, let's just call it a $2 trillion company. They're really not that dissimilar. And Amazon has one hell of an expected move. So the reason I'm bringing this to your attention is not because Amazon's going to have earnings, because Amazon earnings are going to impact the market more than Apple. I'm going to say that again. Without hesitation, you heard what I said. The most important earnings coming out this week has to be Amazon. It's not Apple. You go, well, why would you say that? Because it's a $2 trillion product with a $14 expected move. I mean, Apple is a $2.7 trillion product. I know it's worth like 30% more. So it's a $2.7 trillion product, okay? But it only has a $7 expected move. So with all due respect, okay, buckle up. Amazon's really going to move the market today. And again, when you're trading earnings, I offer you a couple of different trades. Everything you do in earnings, okay, is a matter of expected move, okay? Direction and expected move. But everything you do in earnings, what can you do in earnings, okay? And I always like to preface this because it just gets lost in communication, right? In earnings, you can be bullish or you could be bearish. Now, bullish or bearish trade, let's bring those up. Bullish or bearish trade. You could go, because there's a $14 expected move, you could go just a little bit out of the money. And you don't have to get crazy. Let's not get crazy. You could just do like a 250 wide spread. I know it says bullish or bearish over it. This would be your bullish trade, right? It's just 250 wide spread. You have to move a lot though here. I mean, you'd have to move from 181, right to the edge of that expected move. It's a little far out of the money. Maybe this 85, 87. Whoops. Okay, swing and a miss. I missed the button. I missed the button. So this one's like a buck, right? So this is like $1 for a little bit of a bullish trade, but this dollar can make 250, but it's not really going to make 250. The most it's going to make is about 230, 220, 230. So that would be a reasonable bullish trade. The bearish trade, okay, and again, I'm going to give you different opportunities. So the bearish trade, how far out of the money are we here? 4 or 5 bucks. Go 4 or 5 bucks out of the money on the other side. Bearish trade could be something like buy vertical. There's your bearish trade. That one's also exactly $1. Look at that. They're priced perfectly. It's absolutely perfect how they're priced. If you want a bullish trade or bearish trade, there are your trades. Okay. And again, I'm putting them up there. And of course, you're going to, well, which one are you going to take? As I said, I'm a little ambiguous as to what I want to do directionally in here. Okay. Part of me says, place the bullish trade. Why does part of me say place the bullish trade? Because I have a lot of other bearish crap on. And I'm actually short 100 shares of Amazon. I don't give a damn that I'm short 100 shares of Amazon. Okay. But the bullish trade might make sense for me, not because I'm bullish, but because it actually reduces my risk to some degree. Does that make sense? I hope it makes sense. Like it's pretty easy. It's pretty straightforward. The other trades that people do are like selling expected move. Like I'll do an iron condor just outside $14. To me, $14 seems like a big move. It does. Okay, it seems like a really big move and a really big stock, but like a $14 move. I mean, you're either cracking lows or cracking highs. That's one of the most important things here. Okay, look where we're poised. The $14 moves takes us to new highs or takes us right here. Like, right? So I'm drawing you an expected move, okay, for the earnings. I'm just ballparking it. Okay. I can see what $14 is on the screen. I know, I know people. Anyway, the $14 expected move, and just, suffice to say, somewhere right up here at about 95. This is where we presently are. $14 lower takes you somewhere in, like, this neighborhood right here. It's a bad neighborhood, but it's a neighborhood. So you're either going to break, through all-time high, you're going to break through the lows. You break through the lows, that's going to injure the Nasdaq to a greater degree. Okay, I like it. So I think you could definitely sell the iron condor here, but selling an iron condor, there's no defense for the sale of the iron condor, none. So if you sell the iron condor, you're going to collect a couple of pennies, and you could do the iron condor right at the 95 strike. I mean, that's right on the cusp of the expected move. So you could sell the iron condor, like this, collect 55 cents. That's the call spread side of it. You could sell the put spread side of it. I got to open up some more strikes. Yeah, I'll do put spread side of it. There's about 65. Should I do it right at the 65? Sure. What the hell? I'll go a little further out of the money. Sell these, buy these. Here's your iron. It's one of the irons. You collect 85 cents, but it's 250 wide iron, so you could lose 250 minus the 85 cents that you collected. So, $1.70, yeah, after commissions and everything, yada, yada, yada. You get it. This is your net neutral trade. Okay. This is your net neutral trade. And when I bring this up, the $1.66, I was saying like $1.70, including commissions, but the $1.66 in risk is real. Okay, it's real. And if you're wrong, you're gonna lose the $1.66. I'm okay with this trade. It's not that I don't like it. I'm actually, in this case, $14 seems like a really big move to me in Amazon. So I think that that's a very reasonable trade. What are you guys thinking, huh? Anybody? Okay, what do you like? You want to be bullish? You want to be bearish? You want to be net neutral? And then there's one last trade, and the last trade is, instead of selling the iron condor, you theoretically could buy the iron condor. Again, I don't like that trade though, because $14 move. Like, Amazon's well known to have, broken earnings expectations in the past. It's a stellar move to the upside. Part of me also kind of thinks to, like, Amazon, the last couple of earnings periods, let's look back over the last 3 years. The last few earnings periods, okay, went like disappointment, huge, beat, disappointment. I mean, it's been chopped out, disappointment, nothing going on here, huge beat. It's all over the board. Like, if you like, people constantly try to handicap this, well, all of its earnings are positive. That could not be further from the truth, because all you have to do is look at this gap down. This did nothing right here. Okay. Ironically, right here was a massive gap down to the, well, it's gap down one day, gap up the next day, right? This is a gap down. Okay. Gap up, gap down. Here's it jumped, and then its earnings faded, gap down. I just bring it up with just a quick, glance without, there's studies we can use for this. Here's a huge gap up. Okay. This one's a gap up, and today. So it's very equivalent on either side of it. That's why I said, like, they don't have a lot of preconceived notions about what this is going to look like. Okay. Trains likes the net neutral one. I kind of do too, right? But there's one downside of the iron condor. You want to know the downside of the iron condor? You have to wait 3 days for that thing. You're going to have to wait Wednesday, Thursday, and Friday, because the earnings come out on Tuesday, right? Tuesday, which is today after the bell. So to make the full amount, yeah, the volatility will crush. It's not going to crush enough for you to make money, because the market's going to go to like 195. The market's going to go, to 165. It's not going to sit nicely in between. So you may have to sweat on your little iron condor. Iron condor is sweating all over me. Keep that in mind. You're going to have to sweat. And what can happen is, if this thing starts to see sell side activity, earnings, they'll just drive it down the next couple of days. kick a little Fed in there. I got kicked right in the Fed. It's a new thing. Anyway, now I'm liking the neutral trade a lot less now that I just mentioned getting kicked in the Fed. It's good stuff. Okay. So John was asking me, would I wait to place the Amazon trade to the end of the day? Yeah, I would. I would probably do it in the last 90 minutes or so of the day. Don't wait till like the last 10 minutes, like the last 90 minutes of the day, because the stock is flat right now. It could definitely make a little bit of a move, and that move could really impede upon the progress of whatever you're doing, right? I don't like the butterflies. By the way, if you're going to do an earnings-based butterfly, okay, there's two critical pieces of criteria that you're missing. Okay. Number one, you never do an earnings-based butterfly, okay, for a Tuesday release. It would have to be a Wednesday, Thursday release, has to be, or a Friday morning release, because your butterfly, okay, will not sprout its little wings until probably Thursday or Friday. So you're playing a game of chicken that you can't win in the marketplace. Like if you did a butterfly, like let's say you did the 195 butterfly, just to show you, butterfly, butterfly. It's at like 11 cents, which is insanely low cost for this. You're like, oh, it's low cost. Yeah, but even if it became the at the money butterfly, it's going to maybe double, maybe triple in price. Like, but that's not, you're like, oh, that's great. It's not good. You would have to do a gazillion contracts of that crap because look, even the at the money butterfly right now hasn't moved in price. So any of the butterflies, they speak volumes of price. Okay. Look, the at the money butterfly costs less, okay, than the out of the money butterfly. Yeah, it doesn't make sense to a lot of people, but it's not a good sign, like the butterfly. So number one that you screwed up with the earnings butterfly class is you don't do them on a Tuesday. You got to do them like Wednesday night for Thursday or Friday. Okay. Then time out. You never do a put butterfly and a call butterfly because doing both, okay, after we ran it through a bunch of different Monte Carlo models, so doing both actually did not increase your probability of success. Probability of success, not good. Anyway, with that earnings fly class, it's the guide to maximum edge trading earnings. Okay, I like it. There's a class in that one. So that was also, so there were two classes. I got a 2-for-1 special in classes. I did all this research and I found two different ways to trade it. It was the butterfly or it was the day after. You could trade like options. We've been doing both in here. We've been doing both. I like trading the day after the earnings. I like scalping around the edge of the expected move. Like we're a couple bucks outside. I did it. What did I do it in like a week ago? And it didn't pull back in. It was okay though. We didn't make any money. We didn't really lose any money. We laughed, we cried. Holy crap, I can't remember. I'm actually bothered by that. So this is what happens, people. This is what happens. What happens when you get old and you can't remember your trades anymore. Anyway, it was Google. Okay, I got Googled. I got Googled right in the Googles. Okay, that's like getting feted. Got kicked right in the Google. Hey, that sounds better than getting kicked in the Fed. Works for me. It works for me. I hang out with like 9 and 11-year-old boy too often. Too often. They are amused by this. Okay. No, I couldn't remember it was Google. I can't. All right. I know. Okay. Tim, if I'm getting old, the hell does that make you? Okay. Yeah, it's right, man. It's part of you got fossilized already. I understand. I understand. The ticks are actually kind of a moot point today, but I wanted to go back over here. The advanced decline line, still holding tough. For anybody looking at NVIDIA, bear with me here for a second. Feel a sneeze. See, now that's the problem with having a camera on here is, oh my God, my allergies are killing me this morning, but I got to turn the air conditioning on. That's what it is. We need air conditioning. It's getting hot here. I got to get the hell out of this state. I got to get out of here, man. Okay. You don't understand. It's Arizona. It's getting hot. It's kind of crappy. Okay. It's not me at this time of the year. Not at all. So I'm drying out. All right. I need water. I need humidity. Okay. I need something other than dirt at this point. It's getting brown. Actually, May is not bad. May is not bad in Arizona. Um, it's we're going to be in May right now, right? So May is not bad, like 100 degrees, which it's not yet quite 100 degrees in the 90s. But when you hit like June, it's when it starts to go downhill. But the worst months here are August, September. They suck. And I have to come back a little bit in August because again, they're rebuilding my friggin' house. So I got to come back in August. I'm really excited about that one. When I come back in August, though, our kids are going to be back in school too. And there's nothing like, dropping little Zachy off at elementary school and standing there with all the other parents baking in 115-degree heat in a black shirt because you're an idiot because you wore a black shirt and you didn't realize that you're going to be standing in, basically 3 o'clock in the afternoon, which by the way, 3 o'clock in the afternoon is the worst heat here. Okay. With all the other parents complaining about how this place sucks. Okay. And I really pour it on too. And I'm like, oh, you're from California. I go, it stays hot like this until like December. Okay. We just cook the Californians out. Okay. Word of the wise, if you come to Arizona, get rid of your California plates quickly. Okay. Bad things can happen to those that now have California plates here. The Arizona people are like bumper stickers, okay, about negativity in California. It's violence, I tell you. It's violence. It's good stuff. Okay. Uh, okay. Live in Tucson year round. Okay. Look, I've been here specifically in Tucson. I went to high school in Tucson since I'm 17. Okay. Since I'm 17, I'm as close to native Arizona as you get. Okay. I don't like it. I'm trying out, man. Okay. The island needs me. I need it. Okay. The entity. If the bonds continue to rally like this, it actually opens the door to a rally inside of the S&Ps. I'm annoyed today, and I'm going to tell you why I'm annoyed. You do have the energy sector down, which is actually creating some drag to the marketplace. But I'm annoyed because it's just, I could scalp on an intraday basis, but this environment, it's tough. It's really tough to want to start to execute into this kind of environment. Speaking of this environment, as I said, the Amazon earnings, I'll let you guys know what I'm going to do before the close. I'm definitely going to be here in my office. I have to stay here till like 1 o'clock. I have to wait for more builders. Okay. There's building stuff going on. Anyway, sorry, I'm reading over here. Okay. New York plates in Florida. Okay. Mike, I totally get it. Okay. It's a New Yorker. At least if they have New York plates in Florida, though, you can assume they know how to drive. When you see California plates, you assume the opposite. They don't know how to drive. All right. Continuing over here. Nice. Nice. Okay. Oh man, we have a couple of Californians in here. I'm sorry. Sorry, Okay. I'm sorry for that. By the way, I can rip on California. For those of you that didn't know that, I lived there for 7 years. It wasn't my fault. I was a child. I lived there from about age 10 to about 17. Okay. Notice though, I also lived in New York as a kid. I don't make fun of New York. I should. I should. We should definitely start on that. Okay. But New York was a great place to be back then. Now, maybe not so much. Okay. Onward in here. So NVIDIA, I wanted to bring this up one other time. I can't stress enough. There's been some call buying activity. This is not enough, though, to spark the rip your face off rally right now. It is a very funky little tape to where you can engage on an intraday basis, but it's going to be a rough one. As I said to you guys, I'm going to let you know I'm leaning towards doing a bullish trade in Amazon for the earnings. I'm leaning towards it because it complements the other stuff that I have on. All right, whatever. It doesn't matter how many contracts I do, but please don't let my bullish trade in Amazon later, from, take away from whatever you're thinking. As I said, I brought up both the bullish trade and the bearish trade, and you guys can rewind that and take a look, both the bullish and bearish trades. But I'm happy to oblige if you guys are in here, before 1 o'clock, and probably, maybe even like 11:30ish, I might pop in and come up with a couple of trade ideas and so forth, like 90 minutes before the close. And again, I'm using Pacific time. All right. There's other earnings. Jeff Bierman likes to mention some of this, but Lilly, okay. So Lilly continues to rip a little bit higher here. Okay. This is actually very likely to break into all-time high territory. Lilly has done nothing most of this year after the big break. I shouldn't say most of this year. Okay. To be fair, stock's up 33%. Stock has done nothing since the beginning of February. Since February to right now, it's actually caught in the exact same range, broke a little higher today. This is important because it has not broken, okay, the range just yet. I don't like to trade like in-out spreads until 5 days after. So we'll see what plays in here, but that could actually be an interesting setup. So Lilly breaking to the upside. By the way, when you're looking at this, you're like, holy crap, it's a $55 move. Okay. Well, yeah, and it is, okay, it is a $40 expected move. However, it opened on the expected move and then progressed a little higher. So kind of did what it was supposed to. There was McDonald's earnings. McDonald's is basically flat, nothing said over there. There was PayPal in here, which is up $2. Just to make a quick point, $6 expected move. PayPal is doing absolutely nothing. Like, again, don't let this crap influence you. 3M with earnings, $4.60 expected move. It was $5. It's inside. Like, there's nothing unusual going on, okay, other than Lilly, which Coke is totally flat after its earnings. That's it. Okay. Oh yeah, you know what? I was looking at F5. Okay. F5 is down some $16, but with all due respect, there's no liquidity in here. Okay. Had a $14 expected move. It's moving about 17. There's no liquidity though. This one's not even worth mentioning. Okay. That's basically it. Oh, MicroStrategy had earnings. Okay. MicroStrategy down about $143. Just to make a quick point, $143, and everybody's like, holy crap! I just know off the top of my head, $136. It's friggin' spot on. It's absolutely spot on. It's a blistering move. It moved, okay, to $136, and now it's slipping a little bit lower. That's how efficient anything that trades. Okay, and this barely even trades. There's barely any open interest. This is not even a tradable underlying. In my opinion, a market that's 43.60 at 50.65 is untradeable. It's an untradeable marketplace. Look at this. 17,000 options have traded, but people are getting torn apart in there. Anyway, everything around earnings is, if you will, as expected. Okay, and I wanted to cover that. Okay. I like that. Don't make fun of New York. You may find yourself swimming with the fishes. Part of the reason I can't make fun of New York, okay, that's pretty much where my whole family is from. Okay, born, raised, parents from Queens. It's tough. That's a tough one. Okay, I really don't make fun of Chicago either. Like, I like Chicago. Not anymore. I haven't been to Chicago now since 2019. That is the longest period in my entire life that I have not been to Chicago. I used to go to Chicago even as a little kid, once or twice a year. Okay. Since 2019. Actually, I was talking to Tom Sosnoff the other day. He's like, you ever going to come back to Chicago? And I go, no, I don't think so. No, I don't really see a reason to. Not gonna come where I don't need to go. Pay twice as much for a hotel, have to wear a bulletproof vest coming out of there. It's good. It's good stuff. Anyway, Super Micro, I wouldn't even consider. I wouldn't even consider Super Micro after the close. So I intentionally, and I apologize for, I'm going to say it now, I intentionally did not mention this it's pile of crap. It's a pile of crap in terms of tradability, has almost 200% implied volatility. When I say it's a pile of crap, I mean, look, you're going to get taken apart in these bid offer spreads. The liquidity in here is amateur hour. Okay, this is not the kind of liquidity you want to trade in, right? I'm not going to sugarcoat this. 30,000 contracts. This is all retail. Okay, and this is not good. Okay, this is not good. It's amateur hour inside of here. Don't get taken by these markets, because proprietary trading firms, they wouldn't even be able to trade this. What they'll do is kind of try to carp order flow from the market making firms. That's all you can really do in here. Oh my God, the allergies are killing me. In any regard, yeah, I'm less than enthusiastic this morning. I'm going to let the Amazon earnings come out. Bear with me. There might be a sneeze. There might be. Okay. Christian, you actually live in that portion of the loop. Okay. That's the hood loop, Christian. That's actually right by Jeff Bierman. Bierman actually lives in that area. Okay. Not that I've ever been to Bierman's house. I'm kidding, invited. Okay. Would you invite me? I would. Okay. He's got a cat the size of a dog in that place. It's a good thing he uses like the TheoTRADE background line now, like I'm using, because there's a cat that used to like sit on the bed behind Jeff, licking itself. It's the only thing I could see. I couldn't even see Bierman. I couldn't hear him. All I could do was focus on that damn cat. Okay. Again, it's like a 20, 25 pound cat. It's huge, I tell you, huge. Sorry, I'm cracking myself up because I really did find myself like fixated on Jeff's cat when he was on a couple of different times. I'm like, does the cat have to lick itself while you're live? Can you use some kind of a background on there? Put a green screen up? Anything, man, anything. I got some problems. Anyway, I will trade maybe later today on Amazon. My overall feelings as I bring on the professor. I'm sorry, I am cracking myself up today. Remember, this is not about you. It's about me. Okay, and my ability to crack myself up. Anyway, with that, and Jeff, by the way, is ready to get out of Chicago too. I know Jeff. It is time to get out of Chicago. Jeff is actually a California individual. Okay, but it was before California went to hell in a handbasket. It was like the good California days. Actually, honestly, similar. He was there in a very similar time frame I was. It's not like I went to Berkeley or anything for an English literature degree. You want fries with that degree, Jeff? Huh? Okay. By the way, Jeff is like logging on right now. I'm not going to turn his microphone on until I am well and done. Okay. You will listen to every word I have to say. S&Ps are continuing to progress a little bit lower. As I brought up earlier today, a hint of sell side in the air. Nothing too considerable in here. My feelings on this one are pretty much, it's kind of a moot point. So I didn't like what I read, from Goldman Sachs. In every scenario, we're going higher here. Look, okay, the things you need to be focused on. Right now, the bonds have rebounded just a little bit, but they're still down on the day. The bonds, okay, are ready to break lower. That doesn't actually make me feel warm and fuzzy. The dollar, okay, even though it retrenched a little bit lower, it's still poised to break out. There's a lot of indicators, and the last thing, and I haven't even really mentioned it today, because you have the S&Ps down 20 and volatility isn't doing much, but I'll caution you, volatility is still 50 cents away from flattening out or going into a backwardation, which is very, very peculiar after this rally. Okay. The one thing I leave you with today, okay, recognize something. Expected move today is $24. We're almost there. Like it's almost, that $24 move. We're only 6 points away from it. That's the first thing. The second thing, volatility is still very much with us. I said it yesterday and I say it again today. Even though this is kind of a boring first hour, volatility is still very much with us. And that implies, okay, only one thing. We don't just move up. You're going to get some vicious, unrelenting style down moves. Okay, moves that are actually going to be, back breaking. If you're here to just buy dips, you need to be aware of that, because this is where traders, listen to me, okay, are psychologically dismantled. You're constantly going to be like, we're bidding back, we're bidding back, we're bidding back, drop. We're bidding back, we're bidding back, we're bidding back, drop. This is how people get psychologically destroyed in a marketplace. This is it. If there's a morning that you come in here and you're like, oh, he's not trading very much today. No kidding. It's because I've seen this movie so many times before. When it gets volatile like this, the irony is I'll probably trade less, okay? But you'll see the probabilities of me making money skyrocket because all you do is you just pick your entry point, sit back, let it make money. Pick the entry point, sit back, let it make money. It's just plucking trades off. Whereas in a bullish market, you're like, hey, gotta make this thing kind of work. And then we bid up every day. This is no bullish marketplace. This has got volatility written all over it. Jeff Bierman's coming on here momentarily. He is going to kick off and he'll be talking about rush to judgment volatility indicator game changers part 3. Stay tuned. Jeff Bierman is coming on right now.